Good evening, Vinayak sir.
Good evening.
Yeah, we started live, sir. So that I can generate the link. I am giving.
Okay.
Friends, good evening to all. We are continuing the second part of today's session. Accountancy module B and C. Vinayak sir is there. You can have a small chat with sir. Meantime, all our other members also will join. Vinayak sir, in chat box some questions.
Okay. Anuradha, what do you want to discuss in shares? You want to know the entries or anything specific? Okay. After that, we will discuss bills of exchange also. Forfeiture. Okay. Okay. Right.
Friends, anybody have doubt, you can unmute and ask to Vinayak sir.
Sir, one doubt, sir.
Yes.
The purchase of a car will come under which one, sir?
Purchase of a car. That means what type of asset you mean to say?
Yes, sir. Is it capital expenditure or in one question I read it as the capital expenditure, sir?
Yes, naturally. See, what is the life of a car?
It will come around 10 to 15 years.
10 years minimum. Even the loan which you are sanctioning for between 3 to 5 years. Is it not? So,
Yes,
any asset which is going to be durable for a longer time and money which is spent on these assets, it will be called as capital expenditure. The expenditure for which benefit will be availed for a longer time. Such type of assets, we call it fixed assets usually, because car will be as a fixed user, will be called as a fixed assets, and it will be treated as a capital expenditure. Money spent on purchasing some capital equipments.
but it will not. We will not use that car in company transactions and all, sir. I mean, it will be related to proprietor only.
See, okay, if it is going to be used by the proprietor is owner of the company only. If it is not in the name of the company, it may not be shown in the balance sheet of a company. If he has purchased car for his own purpose, so in his personal balance sheet, at least it will be a fixed asset only. It will never be a what we call it, a revenue expenditure for him. Whether it is for personal use or for company use, it will be treated as a capital expenditure only.
Okay, sir.
Right. So you are talking about shares. Just a minute. In brief, we will see how these shares transactions function. When the shares are issued, maybe through the bankers, because bankers are also becoming underwriters for the companies. So when the shares are issued or when the shares have been publicly, public is coming forward to purchase the shares of that particular company, they will apply and bank will open a current account, share application account, and all the money which is contributed by the customers in the form of with the intention of purchasing shares, all that money will be credited first into the share application money account. This share application money, why it is treated as a separate account and not a capital account is, now they want to sell 1 lakh shares, to issue 1 lakh shares. And if the company is having good reputation, naturally what happens, lot of lakhs of people will apply for the same. Like recently you have seen the LIC or when the new companies, corporate companies issue their shares 3 times, 5 times, 10 times of their required value, the people will be applying for those shares. And all are not expected to get the shares because company is having only 1 lakh shares. So more than 1 lakh shares, whatever people are applying, that money will be returned back to them. So first, whatever application money is received, that application money will be credited to the account called as share application money account. I will go to screen and I will show you how the entries are prepared.
Yeah, dear friends, kindly wait. Sir will join soon.
Okay, Biju. Biju, are you?
Yes, sir. Yes, sir. Yes, sir.
There was some problem in the laptop. I have started from the mobile.
Yeah, no problem, sir. No problem.
So, friends, there was some problem in the laptop. I will continue from the mobile. So discussion part will continue. So when I was explaining you about the share application money account. So the share application money account, which is opened in the form of a current account, and all the money will be contributed into that amount, into that account. So the first entry which the company is making in their books is they are receiving cash, they are receiving money, and that money is towards share application money account. So the first entry which is passed is cash account data to share application money account. This share application money account will be all the money which is contributed by the customers, by the people who are interested to purchase the shares. That amount will be credited to this share application money account. Now the company is having option. They wanted to issue only 1 lakh shares, and they have received application for 2 lakh shares. So naturally, the people who have contributed that 1 lakh shares, only those people will get shares, and the money for all the excess amount which is received has to be returned back to the customers. So what happens is now there should not be any partiality or favoritism. So usually company, what they do, they will go for lottery system, and through that public lottery system, they will select the people who are going to be issued these 1 lakh shares. So the people who have got these shares, suppose 4 rupees out of that 10 rupees total share amount, and the company has told them that with the share application, you will have to send 4 rupees per share and submit that draft, or what is what the way they,
Sir, can mute all the participants, please.
hello. So the 1 lakh shares of for 4 rupees per share, whatever money, whatever the shares have been allotted to the people, that amount only will be taken into the share capital account, and that share capital account will be to the extent of 4 lakhs, amount will be credited to the share capital account, and the excess amount which is received from the customers, that amount will be returned back to the customers by way of draft or by way of credit to their respective accounts. So out of share application money, earlier our share application money account was credited. So this amount which was credited, now this share application account will be debited. Whatever shares have been allotted, that much of amount will be credited to the share capital account, and the remaining excess amount which is received in the share application money account will be returned back to all the applicants. So in this process, what will happen? Your share application money account will be closed. Whatever share capital has to be created, that much of share capital account is credited, and the remaining amount is returned back to the customers. This is the first entry, we pass it. After that, again they will give a call for the remaining amount, like remaining 4 rupees or remaining 2 rupees, first call, second call, like that they will be going on calling from the customers that remaining amount please pay into your account. And when this amount is paid by the customers, the share capital account will be slowly credited with all the money received from the shareholders. Now sometimes what happens? Some people who have earlier applied, they got the shares, and subsequently they have changed their mind, or the money which they had planned to invest in this company, alternatively either they have invested that amount elsewhere, or they are not able to contribute the remaining amount of the share capital in this company. So suppose first share 4 rupees has been received by the company, and when they have called for next 4 rupees from these customers. Now what happens is, these people, suppose out of that 10,000 shareholders, around 500 shareholders are not able to pay the remaining or the call amount which is called by the company, and they are not able to pay that 4 rupees next installment to the in the form of share capital. Now the time limit will be given to them that within 15 days you have to pay the next allotted amount to the in the account. If the company receives from those people, their share capital will be credited to that account. And suppose, for example, some 500 people, 500 shareholders, they are not able to pay the next installment or next amount into this company. So for these 500 people, company will issue a notice that we have received earlier 4 rupees from you, and we have advised to pay the next installment of 4 rupees for allotment money into the first call amount into this company. And the time frame, the time limit which was given to you is already expired. So next 15 days, if you are not going to pay the allotment amount, your shares will be forfeited. What is the meaning of this forfeited? The forfeiture means whatever money has been contributed by the shareholders, that amount will not be refunded back to them. That means whatever 4 rupees this 500 people have contributed, these amount will be forfeited. That means this amount will not be repaid back to the customers. If they say, sir, we don't want to apply for your shares, whatever money we have contributed, please return it back. So these amount will not be returned back to the customers. So now it is choice with the customers. Either pay the next 4 rupees which is demanded by the company, or forget about whatever money has been contributed by you. Now 4 rupees per each shareholder. So nearly 500 people have not contributed. So 500 into 4 rupees, that is 2,000 rupees is forfeited by this company, because those people have not contributed their next called up amount. Now this share capital so cannot be established. So what company will do? To the extent of these 500 shareholders, company will pass an entry, because earlier we have received 4 rupees from them and we have credited the share capital account. So these people are not going to pay the remaining amount. So their shares are going to be forfeited. So when their shares are going to be forfeited, the entry to be passed is share capital account debtor 2,000 rupees to a account opened as forfeiture account, shares forfeited account, and 2,000 rupees amount will be credited to this account. So to the extent of these 500 people, their shares are withdrawn from this capital and they have been transferred to the forfeiture account. Now what is the purpose of this forfeiture account? Because company cannot keep these 500 shares pending. That means they cannot hold it like that only for a long time. They have to be reissued to the fresh shareholders or fresh applicants. So they will publicly declare that 500 people who have refused to pay the remaining amount, their shares are forfeited and we are reissuing these shares. So sometimes what happens, people won't come forward. They say, why to take it? Okay, we don't want. Maybe reputation, they are not heard about it, or they are not aware about the importance of that company. Anything may be there. So people are not very keen to purchase these 500 shares. So what this company will do, in order to attract the customers, they will say that, sir, this is a 10 rupees share and we are ready to issue this share for 9 rupees. So some people will be tempted. When we are getting this money, we are getting this share in 9 rupees. So let us take a chance, let us purchase it. So they come forward and they may purchase this share by paying 9 rupees. So in the process, what happens? Now, what has happened is the face value of the share capital is 10 rupees. The new shareholders who wanted to purchase, they have paid 9 rupees cash for each share. That means 4,500 cash is received from them. Actually, as per your rules, the share capital's face value is 10 rupees per share. So you are supposed to receive 5,000 rupees from these customers. But company is interested to, because they want to sell it and ensure that these shares are sold in the market. So they are ready to sell it. And how they are trying to adjust this loss which is incurred by them, they will try to adjust this loss with the help of this forfeiture account. Because in this forfeiture account, there are already 2,000 rupees credited. This amount is not going to be returned back to the customer. So in one way, this is nothing but profit generated by this company in the process of this issue of shares. Now how the entry will be passed, you just note it. So 2,000 rupees which was credited earlier, this forfeiture account will be debited to the extent of 2,000, because earlier it was credited, so it is debited now, and this forfeiture account is closed. Now, the cash, how much you have received? You have received cash to the extent of 4,500 only.
Recording in progress.
4,500 only. So, friends, this laptop has again started. I will start from the laptop. Are you able to listen to me now? Hello?
Yes, sir. Yes, sir. Yes, sir.
Okay, I am going to screen. I will show you the entries. Right.
Okay, sir.
Sir, please wait.
Sorry, friends. Hello. So I was explaining you about the adjustment of forfeiture entry. So the cash is received is 4,500 rupees from those 500 new shareholders. Forfeiture account is also debited because they want to adjust that forfeiture balance now while issuing the fresh shares. So how the credit will be given? Credit will be given to the share capital account. That is 5,000 rupees, face value of 10 rupees each. So 5,000 rupees will be credited to the share capital account, and the remaining proceeds which are remaining after adjusting this 500 rupees will be transferred to P&L account. So in the debit side, 2,000 rupees were debited for the forfeiture account, and the cash received from the customers, that is 4,500 was debited. So total 6,500 amount is debited. Out of that, 5,000 rupees is credited to the share capital account, and the remaining amount, that is 1,500 rupees profit which is generated in this process of issue of shares, will be credited to P&L account. So like this, when the shareholders are not able to contribute their subsequent calls, their money will be forfeited by the company, and this forfeited amount will be utilized by this company while issuing these shares to the public afresh. And if there is a loss which is incurring in the process of issuing these shares, that loss will be recovered from this forfeited shares account. Okay, so this is the way forfeiture account is functioning. When the amount is not refunded by the company, that amount will be capitalized, or that amount will be transferred to forfeiture account, and this forfeited shares account amount will be adjusted by the company while issuing the new shares. Now, is it okay? Are you able to get clarification for this forfeited shares account? Anuradha? Are you able to listen to me?
Yes, sir.
Yes, sir.
Okay.
Yes, sir.
So like
Yes, sir.
this,
Okay.
when we are issuing the shares, these shares, first application money account will be credited. After that, share capital account will be credited. In case any amount is not contributed, subsequent amount is not contributed by the company, by the shareholders, their amount will be forfeited. So this is the way this forfeiture shares account will be implemented. Okay. What is the next point? Somebody was asking me about the bills of exchange. Okay. Bills of exchange, first, the theoretical questions which are expected in this bills of exchange is, first, very simple question. If you are lucky, they will ask a simple question like, in which act bills of exchange is explained? So what is the act? What is the section number? And in which act this is explained?
Section
NIA
5 Negotiable Instrument Act.
5 NIA.
Very good. Section 5 of Negotiable Instrument Act. What is the year?
1881.
1881. Excellent. Excellent. Because many times they confuse you. They will write everything correctly. Section 5 of Negotiable Instrument Act 1949. Now in haste, what happens? We are not concentrating on the year, and somewhere, although your answer you are aware, just because of you are ignoring the year, your answer may go wrong. NI Act 1881, NI Act 1949, NI Act 1934, NI Act 1956, like that they will mention, and they will try to confuse you. So therefore, I always focus that your year of that particular act should be perfectly remembered by you. So section 5 of Negotiable Instrument Act 1881 has given that what is this bills of exchange? Bills of exchange is a order in writing. I am talking to you about the main features, that what are the important aspects of these bills of exchange. Important aspects, that is we call it important features. The important features are, first feature is This order is always in writing. This order will be with a certain amount. This order, that is this bills of exchange, will be issued to the order. What is written there? Please pay to or to the order of the drawer. And always drawer will be issuing this bills of exchange. In this bills of exchange, there will be three parties. First person is drawer. Drawer is the person who is selling the goods on credit. On whom he is issuing the bills of exchange? He is issuing the bills of exchange on drawee, the person who has purchased material on credit. This material which is purchased by the company, the sundry debtors, and that person has to accept that bill. If that bill is issued, what we call it time bill, that bill is issued for 1 month, 2 months, 3 months as per their agreement. So the moment this time bill is issued by the drawer, first thing what he will do is he will present it to the customer for acceptance. The drawee will write on the face of the bill accepted for payment, and he will mention the date of payment on that. Then only this becomes valid. Now, after the due date, that means after 1 month or 45 days or whatever day is fixed, and as per that date, again our drawer will present this bill, and there he will mention either he will go personally to recover the amount or he may send somebody. That person is called as payee. Payee is the person who is going to receive the payment of that particular bill when that bill is presented to the drawee. So in the process, there will be three parties in a bills of exchange: drawer, drawee, and payee. Very sometimes simple questions are asked that please find out which is a wrong statement. Even in my examples I had given you when I was giving you a lot of questions, and in that they will write very funny things or very simple things like drawer is the person who will make the payment. Is it correct?
No,
Drawer
sir.
is the person who will make the payment. Naturally, statement is wrong. So immediately you have to pick out that and write the correct choice in your answer sheet. So like this, they will try to test you whether you are aware about the basic things in the bills of exchange. So bills of exchange, when they are issued on demand, that means in that what is written that please pay on demand 5,000 rupees. That means whenever this bill is presented, the customer has to make the payment. For a demand bill, there is no need for acceptance because that bill will be paid on demand. Whenever this bill is presented, that bill has to be paid on the spot. Therefore, for a demand bill, there will be no acceptance and there will be no due date. That date, the day when it is presented, the customer has to make the payment. And when the bill is issued for a particular time, 30 days, 45 days, or 2 months, 3 months, that is called as tenor. That is the time given for payment of that bill. And whenever such time bills are given, these time bills have to be paid on that particular day. And for that, the Negotiable Instrument Act, it has been very clearly told that 3 days of grace must be added compulsorily on a time bill. So whenever you are going through the questions on these bills of exchange, very minutely we have to observe that what type of bill he is talking about and what is his requirement. If it is a time bill, the days of grace have to be given, and that is not choice of the drawee or drawer, it is compulsorily to be added on the due date. Now, when we are trying to find out the due date of a bill, there is a process. The process is that bill will be mentioned on the bills of exchange only, it will be mentioned. Payable after sight, that is the one statement they write it, or payable after date. Please observe these two statements, payable after sight or payable after date. When the bill is payable after sight, what is the treatment given? We have to give it is That means the counting of the days should start from the next day of the acceptance. For example, if the bill is issued on 3rd February and that bill is accepted on 5th February, and the statement which is mentioned on the bill is payable after sight. So sight period is maybe 30 days. So after sight means the date of acceptance is very important in this particular statement. So what we have to do, if the bill is accepted on 5th of February, you have to start counting number of days from 6th of February. After sight means after the date of acceptance. If the date of acceptance is 5th of February, you have to start from 6th of February. And the important things which we have to keep it in mind is that after sight, your date of acceptance becomes important. If the bill is mentioned as after date means after the date of the bill, that is the date of issue of the bill. So in the same case, if the bill is issued on 3rd February, so your counting will start immediately from 4th February only. And in many cases, to confuse you, to put you into tension, what they will do is, they will give date of the bill as 3rd February. They will mention the date of acceptance as 5th February, and they will say that this bill is payable after date. And now when the date of acceptance is given, your attention is diverted. So you have to be very careful when you are reading these questions. If the bill is mentioned at after date, just ignore the date of acceptance. It is only given there to confuse you. When the bill is payable after date, that means you have to start number of counting from the next date of that issue of the date of the bill. If the bill is issued on 3rd February, your counting will start from the 4th February itself. So these two important aspects are important when you are finding out the due date of the bill. Then next important issue I told you was days of grace have to be added. Other important aspects which are very popular and which are very common where we get confused is all the bills which are payable on a or after that due date, when the exact date of payment is coming on a public holiday, it is a national holiday. It is declared, and every year that holiday will be declared on the same date, like 25th December, Christmas, 26th January, 15th August, 2nd October. All these dates, never it will be changed. And these are all national holidays. So you may find out some of the cases, particularly in the examination, they will ask you where the due date is coming on 25th December. So as per section 25 of Negotiable Instrument Act, what is mentioned there is, if it happens to be a public holiday, that bill will be payable on a preceding working day, that is previous working day. So that bill will be payable on 24th December. If 24th December happens to be Sunday, that bill will be payable on 23rd December. So the terminology which is used is very important. On previous working day. So strictly we have to follow that. And in the question, everything will be given. You have to just be attentive that what is given and how they are trying to confuse you. Second important aspect in arriving at the due date is, please focus. If the bill is issued or becoming due between January, February, March, then surely another important aspect you have to concentrate is check whether it is a leap year. Leap year means that year we will have 366 days. And in that year, your February month will have 29 days. So how to identify? Very simple thing I will tell you. The year which is divided by 4, clearly, without any balance, that year is a leap year. 2000, 2004, 2008, 2012, 2020. So like that, where the year is divided by 4 and there is no remaining balance at the end of the division, then that year is a leap year. So if it is a leap year, don't forget to take 29 days in the month of February. If you are able to remember these important things, I am sure you will never commit any mistakes for finding out the due dates of the bill. The other important things are when the bill is endorsed. Endorsed means when a person is giving that bill to a person whom he has to pay that the same amount. That is called as endorsement. When the bill is endorsed, on the reverse of the bill, our customer will write, pay to Mr. Srinivas amount of this bill, and he will sign and he will put his stamp, company stamp. So this is called as endorsement. So after that, on the due date, this endorsee, the person who has got this endorsement and the bill, he will present this bill to the drawee and recover that amount from the customer. And in our market, in our business centers, this is a common practice. This bill will be wandering many hands before it becomes due, and some person whose last endorsement is there, that person will be receiving the amount from the drawee on the due date. So all these endorsements, with the moment the bill is endorsed, the entry in the books of our drawer will be closed. When the bill is issued, he is passing the entry as bills receivable account, debtor to customer's account. When the bill is paid, the entry will be reversed. When the bill is endorsed, the bill will be endorsed. So if he is endorsing that bill into the endorsee's name is X. So X account debtor to bills receivable. So in the process, what is happening? Bills receivable account is closed. So when the endorsement is there, bills receivable account is closed. When the bill is discounted, in the same way, now what is this discounting process? Now our customer, he has issued a bill for 5 lakhs. That the bill is going to be payable after say 60 days. So 60 days his 5 lakhs amount is blocked, and no businessman is interested to block their amount even for 1 day. So the moment that customer presents the bill is accepted. When that accepted bill, what our drawer will do, he will go to his banker and he will tell to the branch manager, sir, this is accepted bill, this is the acceptance given by the customer, and I want money for this because I can't. Please mute your mic. I can't wait for 2 months for this 5 lakhs, so give me money. And it is a good business for a banker also, because without doing anything, that is without much process, what we are doing, we are calculating that if this bill is going to be repaid after 60 days, so bank charges, all other things bank will consider, and they will tell that, okay, we are ready to discount your bill, but you will get cash to the extent of 4,90,000 only. So how the entry will be passed in the books of the drawer? Now what is happening? He is receiving cash. So cash account will be debtor to the extent of 4,90,000. And he is allowing discount. That means he is giving, the bill is discounted. That means that is a expenditure for the customer. And as per our golden rule, what is the rule? All the expenses debit and all the gains credit. So customer, this is a expenditure for him because he is getting less amount. So he will debit cash 4,90,000. He will debit discount account 10,000, and he will credit to bills receivable account 5 lakhs rupees. So in the process, what is happening? Bills receivable account is closed. So in the case of endorsement, in the case of discounting, the bill is going away from the customer. It will not be in his hands. So his entries are immediately passed after, whether it is endorsement or it is a discounting of the bill. So subsequently, he need not bother about the bill. So banker, what they will do? They will present the bill on the due date. They will recover their money from the customer. And in our bank, our bills receivable account, which is opened by our bank, that account will be closed. That is the entry which will be passed by the banker. So for a customer, for a drawer, his bill after getting it the acceptance, either it will be endorsed or it will be given to the banker for discounting. If that bill is retained by the customer till the due date, if the amount is very small, say only 10,000 or 20,000, so it is not a big amount. So he will say, why to give discount for this? Let us wait. Anyhow, it is a small amount. So he may wait till the due date of the bill. And on the due date, he will he will present it to the drawee. Drawee will make the payment and he will pass the entry in his books as cash account debtor to bills receivable account. So one question you must have come across in our whenever I was giving you questions, that when the closing, that is the entry will be passed by the our drawer, in which situation our drawer will be passing the entry while receiving the payment. So if the bill is endorsed, if the bill is discounted, he need not have to pass any entries after the payment of the bill. But if the bill is retained by him, till now his bills receivable account is still open. So when the amount is paid against this bill, he will pass the entry that cash account debtor to bills receivable account. If the bill is returned, again his customer's account will be debited and the bills receivable account will be credited. That means the account will be reversed. Sometimes what happens, we have experienced in the corona or COVID 2 years period, that business was totally standstill. Business was not happening. And it is not the mistake of the drawee, or it is not the mistake of the drawer or the banker, for that matter, anybody in the business. But it has happened. It was a natural calamity. So in that situation, the drawee may come forward and tell to the customer, that is our drawer, sir, you must have seen what is happening to our business. Not a single entry has been passed in my account for the last 2 months. So I am not able to pay your 3 lakhs or 5 lakhs bill. Can you not give me some time? Business is now just opening up. And I assure you that I will pay this amount once the business starts. So, but the old bill, which is still pending, has to be closed. So when the drawer takes decision to renew this bill, this is called as renewal of the bill. So when the bill is renewed, that bill's renewal, what happens is the fresh bills receivable account, bills of exchange will be issued to him, and that bills receivable account will be debited, and the old bill account, bills receivable account will be closed. Sometimes what happens, customer will say that, sir, I am also paying interest to the bank. So I cannot just renew this bill for your sake, because I am paying interest in my CC account or OD account. So he will say, okay, sir, whatever is your loss, you charge, I will pay that interest. So he will calculate the interest for 2 months. Suppose it is coming to 10,000. Now, the new bill at the time of renewal, what our drawer will do, he will issue the new bills of exchange for 5,10,000. So new bills receivable account will be debited with 5,10,000. Old bills receivable account will be credited with 5 lakhs, so that our old entry is closed. And 10,000 rupees is interest. That interest is his income. So as per our golden rule, credit the income. So he is crediting interest account to the extent of 10,000. So renewal entries will be passed like this. Suppose the customer says, or our drawer is insisting, sir, total 5 lakhs, it is very difficult to renew. Whatever money you are having, I request you to pay at least some amount, because I am also feeling shortage of cash with me. So he may say, okay, sir, I will do one thing, I will pay only 1 lakh now, and you renew the bill for 4 lakhs. Then it is called as partial renewal. So in that partial renewal, whatever is the remaining amount is there, only that amount will be renewed. Cash account will be debited to the extent of 1 lakh, and fresh, the old bill will be credited. So in the process, what will happen is your old bill account will be paid whatever cash amount is received, that will be debited, and the old account will also be closed in the process. So this is the way the entries will be passed in the books of our drawer. Usually the question again which is asked is some of the important terminologies. Holder in due course, how it differs from holder. Holder is a person who is physically holding the bill. Suppose I have received this bill on the road. When I was walking on the road, I saw some papers on the floor on the road. I just saw it. It was nothing but a bills of exchange for 2 lakhs. So I am holding that bill in my hand. And I am thinking that, oh, okay, if I present this bill, I will get money for this bill from the drawee, because drawee's name is also mentioned there. This person who is holding the bill is called as holder of the bill. But as per law, whether he deserves the payment, he don't deserve the payment, because he is only holder of the bill, but he is not holder in due course. What is this particular term called as holder in due course? Holder in due course is a person who is holding this bill for some consideration. That means there was some transaction, and for that transaction, he is holding this bill with him. For a holder, there is no consideration. On the road only he has got this bill while walking on the road. So this is the main difference between holder and holder in due course. Holder has no right to claim this amount, whereas holder in due course, he is having right to claim the amount because there is consideration for this particular transaction. He has supplied 50 bags of rice, and that is the cost he is receiving in the form of these bills of exchange. So when there is a consideration, it is called as better title to the holder. When the holder will have a better title means when there is a consideration, he will be called as holder in due course. And as per law, only holder in due course is having right to recover this amount from the drawee. So when the bill is returned by the customer, when the bill is returned, the customer has to recover that amount. He goes to court and he files a suit. Sir, I have drawn a bill on this person and this fellow has refused to make the payment. And very surprisingly, very innocently, in the court, that drawee will raise his hands and tell, sir, he has never presented this bill to me. I am not aware about this bill. He has not presented. If you would have presented, I would have made the payment. So court dismissed the case because there is no evidence that the bill is presented to the customer, to the drawee. So there is a process. When the bill is refused, when the bill is returned, dishonored by the customer, drawee, there is a process called notary. These are the advocates who have been given power by the government to work as notary. What is their role? Their role is to present this bill from their side, create evidence, and again, if that bill is returned by the customer, by the drawee, they will issue a certificate to our drawer. Yes, this bill was presented by me and this bill was returned, dishonored by the customer. So when you are filing a suit on the basis of this certificate, you are having right to recover because the proof of presenting the bill is available with you. So this notary public are working to help these drawers to recover their amount. They collect some charges for doing this work, service charges, that is called as notary charges. So this notary is a person who is helping our drawer to create a proof of having made the presentation on behalf of your drawer. So like this, the important terminologies which are related to the bills of exchange, this I have discussed. So if there is any other question on bills of exchange, or you can raise the next doubt. What is the next question? Hello? Are you able to listen to me?
Yes, sir. Yes, sir.
So Is it clear? Somebody was asking bills of exchange. Is it clear to them?
Yes, sir.
Okay. What is the next doubt? Fast.
Sir, rectification of errors.
Huh?
Rectification of errors.
What? Not able to hear.
Rectification of error.
Rectification of errors.
Of errors.
Okay.
Sir, in bill of exchange,
Yes.
sir, we are sending for collection means what, sir? We will give the
Ah,
document to
very
drawee
good.
or what?
Very good. When the bill is discounted, customer is getting money immediately, and bank is deducting some amount in the form of discount, and remaining amount will be credited to the customer. This is called as discounting of the bill. Now, customer is not interested to pay or incur any discount. So what he will do? Now, suppose that bill is out of station. That is the payment has to be recovered from some outstation. Suppose I have issued a bill from Hyderabad on Chennai. Now, alternative for me is to go to Chennai and present the bill and recover the money. If I send it in the courier, anything can happen. So what I will do, I will give to my banker. If my banker is State Bank, I will give it into State Bank of India, and I will tell them, sir, please collect this bill on my behalf. So bank is not giving any money to our customer immediately. On behalf of our customer, our banker will send this bills of exchange along with a covering letter to State Bank of India, Chennai. State Bank of India, Chennai will make the presentation of this bill to the customer, and they will recover the amount from that customer, and they will remit back that money to our State Bank of India, Hyderabad branch. Now, this bank is doing some service for collecting this bill. So they will only collect the collecting charges like dispatch charges, handling charges, and commission on that particular amount. So only commission charges, that is very meager. So commission charges, handling charges will be recovered from the customer, and the bill, the amount which is the proceeds which are received from Chennai branch, we will credit it to the customer's account. Now, in the collection, what is happening? Money is received by the customer only after the payment by the that drawee, and after the proceeds received from that particular branch to our branch. And comparatively, this is a very cheaper transaction. For discounting of bill for 5 lakhs, 10,000 rupees he has to pay. Whereas if he is sending that bill for collection, then maybe collection charges may be 2,000 or 2,500, not more than that. So bank will collect that collection charges and credit that remaining amount to the customer's account. So when the customer has to take decision whether the bill has to be discounted or the bill has to be sent for collection. In the process of collection, banker's relationship is like a principal and agent. On behalf of my customer, this bank is working as an agent to recover the proceeds of the bill from that drawee. So sometimes that question will ask, when the bills are collected by the banker, what is the relationship? So all these things will be important when the questions are asked. Okay. So in collection process, simple thing is amount will be paid only after collecting the amount from that drawee. Whereas in discounting, amount will be immediately credited to the customer's account. Is it clear? Hello? Is it clear, madam?
Yes, sir. Yes,
Yes,
sir.
sir. Yes, sir.
Okay. So next question was rectification of errors. Although there is technology has been developed, we are working with computers, but still the mistakes happen from our side. So for the rectification, that is for errors, to find out the errors or whatever the perfection has been achieved by us in maintaining our accounts, the first process to identify this is preparation of your trial balance. So many times questions are asked on trial balance only. That what do you mean by trial balance? Trial balance is the summary of all the debit and credit balances of that particular company's financial transactions. And all the transactions which have happened and on a particular day, this trial balance usually on the 31st March or on the quarterly basis, this will be prepared. And all the debit balances will be shown on the debit side of the trial balance. All the credit balances will be shown on the credit side of the balance. And it is expected that your debit side and credit side tallies. Why it should tally? One mark question. Why in your trial balance, debit and credit
Dual aspect.
tally? Dual aspect, excellent. Because we are following the double entry bookkeeping. So dual aspect. So our debit side should be always equal to the credit side. If it is there, it is not necessary that just because your debit side and credit side is tallied, that does not mean that all whatever you have done is perfectly correct. Because the errors which are happening while we are working in the branches or when we are working in the banks, 4 types of errors are happening when we are doing the work, when you are doing the transactions. First error is called as error of omission. Error of omission is when you have totally forgotten an entry. That means you have not done the debit, you have not done the credit also. That is called as total omission. If the entry is totally omitted, surely there is no debit, there is no credit. So your trial balance is going to be tally. But because the entry has been totally omitted, when that customer will come to your branch and he will say, sir, I have given you one check for credit to my account and this check is so far not credited, then you will start searching, and usually under your desk or in the drawer or somewhere you will find that entry, the vouchers. And then you will request the customer, sorry sir, this happened, that has happened, and we will try to pass the entry on that particular day. But since it was a total omission, that entry will not reflect, that mistake will not reflect, that error will not be reflected in trial balance. Sometimes it happens that only one side is posted and before you pass the other side, whether when you post the other side, you got a call from your friend, you have gone and talked to your friend on phone and come back. By that time, you have forgotten that you have debited some account and you have to credit other account also. You have forgotten, whatever may be the circumstances. Now in the process, what has happened, your debit is posted and credit is not posted. Naturally, in the evening, your debit side will be more, credit side will be less, because credit side posting has not been done. So when it is a omission of partial, it is a entry, a mistake, error of partial omission, that error will be traced in the trial balance. So total omission, that is complete omission, it will not reflect in the trial balance, but partial omission will surely will be traced in the difference in the trial balance. Second is error of commission. Error of commission is wrong posting, posting wrong amount, totaling the ledgers or totaling the balances, carry forward these balances to the next page. Today, because of computers, all these have no relevance now, because when during our time, when we were working in the manual scenario, at that time, you have to carry forward this balance to the next page. And here you will write down carried forward 3,580 rupees. There I will write 3,850 rupees. Mistake can happen. We are all human beings. Our moods differ. When you are angry, lot of mistakes happen on that day. So the mistake can happen in carry forwarding, while totaling, while balancing. You are debiting that account, but you are not correctly balancing that account. Instead of deducting, you are adding. So whether it is a mistake in balancing the account, totaling the account, carry forwarding the account, posting to the wrong side of the account, or posting the wrong amount in the account, all these are called as an error of commission. and error of commission will surely affect the trial balance, because wherever this mistake has happened, that side will be affected. So error of commission will always affect the balance of trial balance. It will not tally. Third is error of principle. Now, as per our accounting standards, how many accounting standards we are having? Can anybody tell?
29.
29.
29 accounting
29.
standards. Very good. So
Out
in
of
this,
29, 27 only. Because 2 are omitted.
which accounting standards?
6 and 8, depreciation and R&D.
Okay, so whatever accounting standards, as per that accounting standards, we have to follow the procedure for maintaining our accounts in the bank. Now, in the process, what is happening is, as per that fixed assets particular accounting standard, what is mentioned there, I am giving you this example, that when you are treating the fixed assets, whatever the expenditure incurred by while purchasing the asset, all that initial expenditure has to be debited to the asset account only. That is the policy given in the accounting standard. So whatever the transportation charges which are incurred for transporting that particular machinery, or installation of machinery, or loading, unloading, or whatever charges are happening till the machinery is installed in the unit, all that expenditure which is happening at the time of purchase of that machinery or installation of that machinery, all that amount has to be debited to that particular asset account only, and not to the expenditure account. If the lorry charges are incurred, that lorry charges have to be debited to that machinery account only, and not to the transportation charges. That means it will not be coming into the P&L. It will go directly to the asset side. Now, this is the policy. Now, these such things are called as error of principle. Now, suppose this machinery, a person is not aware. He is a new join to the company, and machinery has been delivered, and the bills have been given to him. And as per his regular practice, out of his innocence, he has debited the transportation account or freight charges account, and the remaining amount is debited to only machinery account. So this is going, this has happened. Now, when the auditors check this, they will find out the mistake, and they will say that this freight should be debited to the assets and not to the expenditure. Now, what happens is, whether the debit is going to the expenditure or debit is going to the asset side, it is going to be debited only. So because it is going to be debited only, your trial balance will not have any impact. This will be traced only while checking the accounts. Now, what is the importance of this? Because what is happening is that transportation charges of 3,000 or 5,000, if they are debited to P&L account, the profitability of that company is immediately affected, and it is not as per the accounting standards. So what we are doing is, we have to correct that entry. Then we will credit the transportation account, freight account, and debit the machinery account. So when such mistakes are happening, these are called as errors of principle. And these errors of principle will not be identified or will not be traced from the trial balance, because trial balance in this case will surely tally, because whether account is debited to transportation or debited to asset, debit side is same. So when the error of principle is happening, it will not affect the trial balance. And last is compensating error. Compensating error means one error is compensated by other error. Now, when such things are happening, when one error is compensated by other error, naturally what is happening is your trial balance will tally. Suppose you are debited less in one account, 100 rupees. And at the same time, you have committed a mistake of undercasting your credit side also. While doing the trial balance total, by mistake, you have made a mistake of taking less 100 rupees on the credit side of the trial balance. Now in the process, what happens? Your debit is tallied, your credit is also tallied. And in the process, when it will be traced? When you are doing the checking. When you are doing the checking, you will find that this account has to be debited for 500, not for 300. But at the same time, why it is not traced? Because there was similar mistake happen on the other side of the trial balance also. So when such one error is compensated by other error, such errors also will not be traced in your trial balance. So when you are talking about errors, your questions which are focused in this area are, what are the different types of errors? Which errors will affect the trial balance? Which errors will not affect the trial balance?
Recording in progress. Recording stopped.
Biju,
Recording stopped.
Yes, sir. Yes, sir.
okay. Okay. All right. Again, I will join back. So, you are able to listen to me now?
Yes, sir. Yes, sir.
Okay. So, the questions will be asked in this way that, what are the errors which are not identified by the trial balance? Sometimes they ask you why it is so. Then what are the errors which are which are traced by the trial balance? So on the basis of these 4 types of errors, you will be answering the questions. Then how the errors should be rectified. Now, for when it is an error of commission, you have done a wrong posting. So only pass the fresh entry for correcting that particular mistake. If you have forgotten to credit one account, just credit that account. Now, for errors of commission, whatever has been missed or whatever mistake has been done, that mistake has to be corrected. If it is a total omission, then you will have to pass the fresh entry. And sometimes what happens, your trial balance is showing some difference. Your credit side is less by 3,000 rupees. Debit side is more by 3,000 rupees. You are going on searching the mistakes. Because earlier the rule was, unless you don't tally your trial balance, you cannot proceed to start your final accounts. Because your final accounts will not tally if your trial balance is not tallied. But you cannot wait for days together to tally this trial balance. So what they suggested was that whatever side the difference is there, that side you open one suspense account, temporary suspense account. So if your credit side is less by 3,000 rupees, what you will do, you will open suspense account, you will credit 3,000 rupees, and for the time being, your trial balance will be tallied. But your final accounts process will be done by your team people, and they will proceed with the functioning or preparation of profit and loss account and balance sheet and so on, remaining things. But at the same time, one team will be asked to only concentrate to find out the mistakes which have happened and which were not in a normal course, they were not able to be traced by the your normal rectification process. So whenever in the process, what happens, you will check everything, all the accounts, all the postings, all the entries, everything is checked by you, and you will come to know that some accounts were forgotten like this. There was some partial entries which were passed. Debit was passed, but credit was not passed. So in that process, what happens? The auditors, when they are checking your final accounts, the last question they ask you is whether your suspense account has become nil. So after rectification of all the entries, it is expected that our suspense account should become nil. So whatever errors have been traced by you, whatever debit credit has to be done, it has to be done because one side only entry will be passed by you. Second side, with the help of your suspense account, you are passing that entry and trying to write off that suspense account. In the process, the suspense account will be becoming nil. So when the suspense account becomes nil, that means your all the errors have been properly rectified. Then only your auditor will give certificate that all the accounting procedure followed by this company is as per the law, as per the accounting policy of that particular company. So for rectification of errors, usually types of errors, how the errors are rectified, what is the purpose of suspense account, then how the suspense account can be made nil. So all such type of entries, such type of questions will be asked, theoretical questions will be asked. And sometimes what happens, they will give one transaction and they will just ask you, in this process, please tell whether you will debit suspense account or you will credit suspense account. So at that time, you have to just see the question, read it carefully, see what has really happened, what the mistake has happened, to nullify that mistake. If it was a wrong debit, then you will have to credit. So when you are crediting that particular account, naturally where you have to debit? You have to debit for the suspense account only. So in the process, what happens after all your rectifications, your suspense account will be made nil. That is the importance of this rectification of errors. And this rectification of errors is must, because your auditors will not give you certificate till all the errors are rectified. Okay, friends? Any other question? Next question.
Sir, an example of suspense account can you give?
Suspense account. Okay.
Sir, undercast to overcast also. Sir.
Okay. Undercast means less, taken less. If 2,500 has to be taken, they have taken 2,300. That means they will mention there that that account was undercast by 200 rupees. That means it was mentioned less by 200. Overcast means it was mentioned in excess of whatever is the balance. So these are the terminologies which are used only to confuse us. They may not say that balance was less. They will say that that account was undercast by 200 rupees or overcast by 200 rupees. The meaning is, if it is undercast, less by 200. If it is overcast, it is more than 200 rupees. Okay. So usually whenever we talk about how the suspense account is to be rectified, some example we will have to take. Actually, in the questions I had given this question also. Suppose there is a entry of suspense account is credited because the difference of 1,000 is there in the trial balance, and suspense account is credited to the extent of 1,000, and they have asked us to rectify the mistake. Now we are going on checking. Now there you find out that one account was wrongly credited. That account should have been debited, but that account was wrongly credited. So in the process, what happens? For correcting that entry, what you will be doing, you are crediting the correct amount for that particular account, and debit to what account you have to give? You have to give that debit, that is that you have to debit the account of suspense. Suppose one account you have to credit 1,000 rupees in a particular account, and the mistake has happened and you are not able to trace that mistake earlier. In the process, you have credited the suspense account. Now you have traced the mistake. One account was not credited properly. So that after tracing that account, what you are doing? Suppose Srinivas account was not credited earlier properly. 1,000 was difference in their balancing, whatever has been done to that particular account. So now when after tracing the mistake, Srinivas account should have been 10,000, but it was showing as 9,000. And because of that, there was a mistake. And when we are not able to trace the mistake, we have credited the suspense account. Now I have traced the mistake. Now I want to credit to the Srinivas account 1,000 rupees. Now, just like that, I cannot credit. Then how I will adjust this difference? So to adjusting this difference, what I will pass the entry is debit suspense account 1,000 rupees and credit Srinivas account with 1,000 rupees. So 1,000 rupees by crediting 1,000 rupees, that balance will become from 9,000 to 10,000. And suspense account, which we are maintaining only for a temporary period, that account will be nullified by debiting that account. So your suspense account will become nil and your trial balance will be corrected. All your errors will be rectified. So whatever the mistake has happened, to correct that mistake, this suspense account will be utilized. And in the process, this suspense account will become nil. Okay. Next question. No questions. Very good.
2x.
Sir, can you tell me something about bond theory, sir?
Huh?
Bond.
Bond.
BOND, bond.
Yes, BOND bond, I know. But regarding these bonds, debentures, these are all the areas of module A. You are having one class on Saturday. That particular faculty is in a better position. Simply, I don't
Okay, sir.
use some reasoning and
a lot of confusion is there.
Yeah, surely.
It could have doubt there.
Surely, but please note down your doubt, and on Saturday, please get clarification, because this is the important examination time, and my experience should not mislead you. I want to increase your score, not to reduce your score.
Thank you, sir.
So, depreciation pertaining to our module A.
Yeah. So suppose
that you can ask
Depreciation.
Depreciation, very good. Depreciation, I will ask you rapid fire questions. You go on replying to me. What is a depreciation first? Anybody?
Reducing the actual price of
Reduce
asset.
the original price.
Why depreciation is charged?
Use
Based on time usage.
Why depreciation is charged?
because the asset has a long life, a certain limited life, so it is going to be a productive for I think maybe certain years, defined years. So that has to be divided amongst the particular errors as per this life cycle.
Very good. So what is the depreciation? The most important feature for a depreciation is it is a book entry. Cash is not involved in the process of depreciation. Now depreciation, we are taking it as an expenditure on the P&L account. When the depreciation is debited to the P&L account, your profit to that extent is reduced. But all your debit side entries on the P&L account, whether it is salaries, taxes, insurance, advertisement, rent, you have paid cash, you have paid some amount towards that. Whereas, although you are debiting a depreciation account, you are not spending a single rupee. That is the most important feature of a depreciation, and therefore depreciation is called as a book entry and not a cash entry. Now, having known this feature, this depreciation is, as you are very rightly explained, that this depreciation is charged on the fixed assets for the wear and tear, for the usage, for all the whatever is happening, excess usage of that particular asset. The value of that asset will be going on decreasing year by year because of the excessive use of that asset. So for all these reasons, the value of the asset is going down. Then to how to adjust that, for that depreciation procedure is derived. So depreciation, as per our accounting standards, they have given a detailed policy that how depreciation should be accounted for. So basically 3 depreciation procedures, that is calculation of depreciation, has been explained. This depreciation, as whatever is the policy your company adopts, or now even our bank adopts, they have to follow the same procedure every year. This year, you cannot say that I will follow straight line method, and next year you will say, no, sir, this year I want to follow return down method, return down value method. No, you have to, there should be consistency in your implementation of these procedures. So in your accounting policy, you will declare that my company or my bank will follow this depreciation method every year. This will be the rate of depreciation, and all these details will be mentioned in your accounting policy. Now, whatever our statutory auditors are checking your accounts on 31st March, and you must have seen, they will not be very serious about your all other statements, but they will be very serious about your fixed asset statement, because this is the area where mistake can happen. And sometimes many organizations, many banks, many companies have played mischief in this area by misleading, giving misleading statements, and by doing manipulations in their calculation of depreciation. Therefore, our statutory auditors will be very focused on this particular fixed asset statement. What is the depreciation charged? What is the policy? What is the method? What is the rate of depreciation? All these things will be very minutely observed by your statutory auditors. Now, what is happening is, by 3 methods, basically 3 methods we explain in our process. First is straight line method. In straight line method, every year, same amount will be charged as depreciation. Example, if the value is 10 lakhs and the life of machinery is expected for 10 years. So every year, 1 lakh rupees will be deducted as depreciation. And every year, 1 lakh, 1 lakh, 1 lakh, like that, all the 10 years, your at the last, your book value of that asset will be 0. That means in a straight line method, your charging of depreciation will be same amount will be charged. Whereas in the case of return down value method, that is, every year your depreciation will be calculated on the outstanding balance of that particular fixed asset or that particular financial year. Now we will take the same example of 10 lakhs machinery. First year, 10% was your depreciation rate. So your outstanding balance as per your balance sheet is 9 lakhs. So in this financial year, you have to charge 10% on the outstanding balance, that is only on 9 lakhs. So it will be 90,000. So 9 lakhs minus 90,000, it will be, how much it will be? 8 lakhs 10,000 in your next financial year. And in the next financial year, your depreciation rate will be 10% of the outstanding, that will be only 81,000. Like that, every year, your depreciation amount will be going on reducing, because your depreciation is charged only on the outstanding balance of that particular financial year. This is called as return down value method. And third is sum of digits method. This is a sum of digits method, means a denominator. If suppose your expected life of that machinery is for 5 years, then the formula is you total the number of years, that is the number of digits, 1, 2, 3, 4, 5. So 5 plus 4, 9 plus 3, 12 plus 2, 14 plus 1, 15. So 15 will be your denominator, and your numerator for the first year will be 5 by 15. That means 1/3 will be your depreciation. Next year, your depreciation will be 4 by 15. Third year, it will be 3 by 15. Like that, every year, the number of years are reducing. You will be going on as per that particular year. Your rate of depreciation will be charged on the particular asset. So when you look at this procedure, you will come to know that in the initial years, your depreciation will be very high, and slowly it will come down. It will be reduced stage by stage. In the initial stage, when the machinery is very good, it will be usaged, and the company will be in a position to pay higher depreciation. And slowly, when the machinery starts getting jerks, at that time, naturally, it will not work as it was functioning in the first year. So naturally, the depreciation rate also will be charged according to its usage. So 5, 4, 3, 2, 1, like that every year, your charging of depreciation will be going on decreasing. It is called as sum of digits method. These three methods are usually implemented in the case of our calculation of depreciation. And whenever we talk about salvage value will be reduced from the cost price, and calculation of depreciation will take place. Today in the group, you will see one example which I have explained it, and that is the way. If salvage value is given to you in the example, please follow that rule. You can refer that whatever we have mentioned it in the group now. Okay. So depreciation is theoretical questions which are asked on the depreciation are, it is a book entry, and the debit will be depreciation and credit will be to the fixed assets. So depreciation account debtor to the fixed assets. Now, usually what happens, fixed assets at its cost price will be called as gross block. After the depreciation is deducted from that gross block, what remains in the next financial year is called as net block. That means cost price minus depreciation, whatever is the balance outstanding as on that in that financial year, that is called as net block. So many times this question is asked, what do you mean by net block? What do you mean by gross block? Gross block is cost price, and net block is after the deduction of depreciation. So this depreciation now, when I say it is a book entry, then where this amount will go? You are not paid cash. This cash is available with you. Therefore, what we are doing when we are talking about cash accruals, cash accrual means cash available with your customer or the proprietor, is net profit plus depreciation, because depreciation was only a book entry. So whatever is the net profit plus depreciation will become the cash availability with the customer. Now the depreciation, whatever is debited to the P&L account, you say that amount is retained in the business, then in what form it will be retained? It will be retained in the form of reserves. You will find that you are having in the capital and reserves. Capital and reserves means various types of reserves which are generated by the company for any future untoward situations experienced by the company. These type of funds will be coming to the rescue of that company. So depreciation charged will be put it into the depreciation reserve account. It will be shown in the liability side along with the capital and reserves. So many times what happens now, for example, 10 years, 10 lakhs machinery, you have recovered 10 lakhs depreciation every year. So at the end of the 10th year, your depreciation reserve will be 10 lakhs. Your machinery account will be nil. So your company will be in a position to purchase new machinery without going for any loan. They can just take money from the depreciation reserve and utilize that money for purchasing the new machinery. So it is helping. It is nothing but buffer for the company. If the company gets some unexpected losses, or what we call it, some natural calamity happens. So in that situation, this depreciation reserves will surely help the company to compensate all those expenditures which were never anticipated by that company. So usually the questions which are expected from the depreciation area are, what do you mean by depreciation? How it is charged? Why it is called a book entry? Where this money will go? This money will go to depreciation reserve. What are the different methods? What do you mean by straight line method? What do you mean by working written down method? Or what do you mean by sum of digits method? So if the basic principle, if you are able to understand from this depreciation, I am sure anything, therefore I am not only replying to your yes or no questions, I am trying to give you more information because we don't know what will be the nature of questions which will be asked you in your examination. So all the related things which pertaining to depreciation, I am trying to tell you. And what are the advantages for the company out of this depreciation? Income tax department has given you this exemption that they are permitting you to treat it as an expenditure because to that extent, your income tax is exempted because income tax is reduced. Because if you are debiting depreciation 3 lakhs rupees, your profit is reduced to the extent of 3 lakhs rupees and you are able to save income tax on that 3 lakhs rupees, but it is officially permitted. So the customer's benefit is that he is able to save his taxes with the help of showing this depreciation as an expenditure, which is allowed by the income tax department. Okay, friends, any question on depreciation?
So can you explain contra entry in brief?
Contra entry. Contra entry means usually the example what in our you must have studied this cash books. In cash book, when you are having columnar or tri-columnar or what we call it multi-columnar class cash book. Now you are having on the debit side cash column, discount column and bank column. In the same way on the credit side also you are having cash column, discount column and bank column. Now why I am giving you this example is very easy to understand the meaning of contra. Now that customer is depositing 10,000 rupees in the bank. Now that person is having 10,000 rupees cash with him. Now what is happening is in his cash book, because cash is going out, he is crediting his cash book to the extent of 10,000 and his bank in his account, his bank account is increased by 10,000. So on the debit side of his cash columnar book, you are debiting bank account with 10,000 rupees. Now in the same cash book, one column on the credit side, cash column is credited. On the debit side, bank column of the cash book is debited. When the entries are passed in the same books, which are pertaining to two different accounts, they are called as contra entries. Because you need not have to pass separate entries for that, because it will be appearing on the debit side of same cash book on the debit side in the bank column and on the credit side cash column of his cash book. This is called as contra entries.
Okay, sir.
Next.
Sir, LIFO, FIFO, first in, first out.
Accounting
One by one ask, please.
Yes, madam. What is your question?
accounting convention.
Accounting conventions. Oh, you are going to the basics. Nice. Can anybody tell how many types of conventions are there?
4, sir.
4 are there, sir.
What are they?
Materiality, consistency, conservation, and full disclosure.
Full disclosure. So convention means it is a practice It is practice followed by all the accounting companies or accountancy followed in the accountancy. What are these conventions? First convention is very easy convention, that is full disclosure. Now, as per our Basel norms, that has been made compulsory, that you have to send hundreds of returns from your bank to RBI. Every aspect, you have to send return to them. You have to disclose whatever is, that means you should have 100% transparency in your functioning. So it is a convention. Second convention is regarding conservatism. Conservatism means always expect losses or make provision for losses, but never make provision for profits. This is called as conservatism. Naturally, all of us in the bank, you are all having your RDs, your FDs. The moment you get arrears, okay, nowadays you try to purchase something. Otherwise, there are some people who say that if you are getting 50,000 arrears, 25,000 you may purchase something or go out for enjoying the trip, and maybe some 20-25,000 you will put it in a FD or STDR, and you will, why you are doing this? Maybe for your children education it is required, maybe for some unexpected events in future, you must not suffer at that time. So you want to save something now, and don't suffer in the future for lack of money at that time. So what you are actually doing, you are trying to do something, anticipate some future issues and trying to save against that. Send your children to US for studies. At that time, you may not get lakhs of rupees immediately. So you may start saving that from now only, anticipating that you may incur such expenditure in future. This is our natural tendency of all the human beings, that we always anticipate loss and make provision for that anticipation. The same policy is implemented in banks, same policy is implemented in the companies, that always anticipate loss, but don't anticipate profit. You cannot say that next year our bank will incur or our bank will achieve 1,000 crore profit. So I am ready to give 1 month salary to all my staff. Can your MD declare like this? He cannot declare, because nothing is certain. But at the same time, when you think about your NPA accounts, now NPA accounts, what we are doing? We are having varieties of provisions. What are these provisions? These provisions are nothing but in case your account becomes bad, at that time you should not suffer. So you start providing from now only. So in the first stage, when the account is in the substandard, how much amount is provided by us as a banker? What is the rate of provision for substandard assets?
25%.
40.
Please, always I give one statement whenever I am giving you questions. Please read the question carefully. Now I am telling you, please listen the question carefully. For a standard asset, what is your provision norms?
40% on security, sir.
My dear friend, I am using the first word, substandard asset.
100%, sir.
Amma Anulakshmi, substandard asset, what is the provisioning norms? Only 2 days.
First 1 year, 25%.
Secured 15%. For secured.
Ujjwala, excellent.
Secured 50.
No. Don't get confused. I will explain you now. I think now time I must explain this, because you are surely 2-3 marks I can add you today. When you are talking about provisioning norms for substandard asset, it is 15% on the outstanding balance. Please listen carefully. 15% on your outstanding balance. And if by some reason that account is becoming unsecured, maybe for temporary period, but it is as on date, it is becoming unsecured, or the security value is less than 10%. That is secured. Just listen. Just listen. Please, Rajiv, mute your mic. Important things we are discussing. When in substandard asset, when the security is very low, that is less than 10%, for such accounts, you have to provide 25% on the outstanding balance. Please listen this carefully. 15% for all the secured substandard assets, and all the unsecured substandard assets, you should charge 25% on the outstanding balance. Every word in this is very important for you. And surely on these provisioning norms, you will get 2-3 questions which are scoring questions for you. And for this, you are surely the provisioning norms play a vital role in your scoring. Now, are you clear with your substandard provisioning norms? 15% for secured, 25% for unsecured, but the underlying most important principle is this 15% and 25% is on outstanding balance, not on secured and unsecured. Please keep this in mind permanently, because when you are going to clear your Jaiib, again in CIB, you are going to face these issues of Npa provisioning norms. So for substandard, 15% for all the secured substandard assets, and unsecured substandard assets, it will be 25% on the outstanding balance. This is one part. When it comes to doubtful, what are the different categories in doubtful?
DA1, DA2,
DA1, DA2, DA3.
D1, D2, D3. What is the time period for D1 category of asset?
1 year.
1 year.
1 to 3, 1 to 3, more than 3.
2 years.
12 months, sir.
12 months.
Okay. Okay, I will explain you. I don't want to confuse you further. See, very clearly remember one thing. The moment asset becomes NPA, for 12 months, it will be in substandard category. And usually I used to ask this question to all my field officers and managers. What will happen to this substandard asset after 1 year? And very cleverly, everybody used to tell that they will be transferred to D1. Yes, category-wise D1. But being a manager and field officer, if a positive field officer or a manager, you must have told that, sir, that account will become standard. Okay, that is a different story. So after 12 months, that account will become D1. In D1, it will be retained there for 12 months. Still in that 12 months, there is no recovery. It will be transferred to D2. So 24 months, it will be in the D2 category. And after that 2 years, it will be transferred to D3. And till the accounts are recovered, that account will be there in the D3 category only. Now, why this is important? Because many times what is happening is they are giving you the date of NPA and they are telling you as on 31st March 2022, what will be the provisioning required for this particular account. And if you are aware about the periodicity of this particular accounts, then only you will be in a position to apply the correct norms. So for if it is within the first 12 months, you will apply the substandard norms. If it is more than 12 months but less than 24 months, you will have to apply the D1 provisioning norms. What are the D1 provisioning norms? D1 provisioning norms are on secured balance, you have to charge 5% provisioning, and on unsecured balance, you have to charge 100% provisioning. So first D1, 25%, second D2 for the next 2 years where this account is going to be in the D2 category, In that category, your provisioning norm 40% on the secured balance and 100% on unsecured balance. And from D3 onwards, all the accounts, whether secured or unsecured, your provisioning will be 100% only. Please remember this, otherwise note down this, but don't forget these things. These are very important when you are going to write your examination. The period for your NPA and the provisioning norms, they will not give simple questions to you. They will give you dates. Now, if the account has become NPA on 3rd May 2021. So as on 31st March 22, if that account has to be provided, what should be the rate of provision? Because it is less than 12 months, it is in the substandard asset and you will have to charge 15% provisioning. If the date is pertaining to 2019, 2020, then you have to check 12 months substandard, 12 months D1, next 2 years D2. Like that, you will have to calculate the number of years from the date of NPA, and then only you will be going for making those provisioning norms. And surely scoring questions will be there in this particular category. So be careful. Although I am not dealing with NPA, but I am tempted to, because I have to tell you, because I don't want that you should lose 2-3 marks just because of these small confusions. Now, are you clear about these NPA provisioning norms? Hello?
Sir, what is D1 secured percentage, sir?
For D1, 25% on secured. D2,
For unsecured?
Unsecured 100. It is always 100 for all the unsecured portion.
Okay, sir. Okay, sir.
D2, it is 40%.
For D3, 100.
D3, everything 100. And for loss also 100.
Okay, sir.
Who can
The first
declare
point
loss
you
asset?
told us the 15% and all. That point
Are
once
it-
again repeat, sir.
Yes. Yes, Anu. What is your doubt?
Sir, first one point you explained us, sir, 15% for secured
Yes.
and all.
I will
That
give you
once
example
again.
because that example will give you more clarity. See, 10 lakhs is outstanding in substandard asset. And because most of you must have prepared annual closing statements or at least checked or seen. When you see the statements, 10 lakhs is outstanding and maybe 9 lakhs is value of security. No problem. Now value of security is sufficient. It is more than 10% of the limit. So in such situations, you will have to provide 15% on 10 lakhs rupees. Okay, that means your provisioning will be 1,50,000. Right. Now, suppose your same outstanding is 10 lakhs, but value of security is mentioned only 90,000. 90,000 value of securities by mistake it is mentioned. Okay, whatever may be the situation. It is a temporary situation. I don't say that that account is defunct. Maybe on that day there was no stock, something has happened and stock is valued only at 90,000. So what is our principle? If the value of security is reduced to less than 10%, for a 10 lakh stock, at least your stock should be more than 1 lakh. If it is less than 1 lakh, that means it is treated as unsecured. But because it is only a temporary measure, what the RBI has advised, if you find such cases in substandard asset, then you have to charge 25% on 10 lakhs outstanding. That means immediately your provisioning will increase from 1,50,000 to 2,50,000. That is the importance given to the value of security in our statements. Just because of small mistakes in valuing the assets, we are creating so much of additional provisions for our bank. Is it not? It is provisioning is nothing but a loss to bank. So these provisioning norms for substandard are for all the secured accounts 15% of the outstanding balance of 10 lakhs rupees, 1,50,000. And by chance, if the value of security is nil or very meager, then you have to charge 25% on outstanding balance. Every time I am what you call it, pressing on this word outstanding balance, because most of you will confuse the provisioning norms which are applied on doubtful assets and substandard assets. Because in doubtful asset, what is the explanation? 25% on secured and 100% on unsecured. Whereas in the case of substandard, 25% on total outstanding balance. Please keep this in mind whenever you are getting any question on substandard assets, because this is a more confusing area when your provisioning norms questions are given to you. Okay?
Sir, what about standard asset?
Very good. Standard asset also provisioning has to be prepared. And this is really an example of convention of conservatism. Because we were talking about conservatism actually, and we slipped to provisioning norms. So these provisioning norms are nothing but anticipating loss for your bank. So in the case of standard asset, account is standard, so it is 100% productive. But still, Reserve Bank of India says, what can you say? Because in Corona period, we have experienced such big so-called great promoters and businessmen have gone into liquidations because it was uncertain, anticipated. So in such situations, Reserve Bank of India says, please provide also against this standard asset, so that in case, because of some uncertainties, your bank requires some additional provision. At that time, banks should not incur huge loss. At that time, you will have some buffer provisioning with you. Because for standard, we need not have to provide in a huge level and keep it aside. It is only a nominal provisioning. Can anybody tell me what are the provisioning norms for standard assets? It is very important again.
0.5.
Huh?
0.5.
0.5%.
2.2.04.
See, 0.25% on SME and AGR accounts. 0.25% on AGM for AGR and SME accounts. For all the real estate housing, 1%. Real estate, commercial real estate, 2%. And for all other assets, it will be 0.40. That means all your housing loans, vehicle loans, or your retail banking loans, they will be charged with 0.40%. Now, in your examination, they may not give whether that account is SME, AGR, or real estate. They will only say that what is the rate of percentage of provisioning for your car loan. So car loan comes under other retail assets. So all other assets which are not included in SME and AGR and real estate, all such accounts will be charged with 0.40% as provisioning. This provisioning will be done by this, and this provisioning is working as a buffer to you for any unexpected jerks our bank gets in future. Yes, any question? Any question on standard assets?
Sir, please repeat it, sir. 0.25 for SME and AGR.
Yes.
0.1 for real estate, sir.
Yes. 0.2 for commercial real estates. And
okay, sir.
For all the other retail accounts, it is 0.40%.
Okay, sir. Okay, sir.
Right.
Thank you.
Okay. So when we talk about convention of conservatism, this is conservatism means what is, if you are anticipating any uncertainties in future, you will have to provide some expected amount towards that. Yes, Sheshgir Rao, you want to ask something?
No, sir. No, sir.
Okay. So this is convention of conservatism. Then we were talking about conservatism of materiality. That means we are dealing with money. We are dealing with only material things. We are not talking about emotions in accountancy. No, because there is no value for emotions. Accounting value is not there for emotions. Although emotion is having a great value as a human being. So materiality means all the material things only will be considered in the accounting process. Health of the managing director will not come in your balance sheet. Only how much he has achieved profit will be mentioned. Okay. So these sometimes these such questions are asked, that what is not a materiality in the case of the following things: health of the manager, health of the managing director. These are not the things which are accounted in our balance sheets. Is it not? Is it clear regarding conventions?
Yes, sir.
Yes, sir.
Right.
Yes, sir.
Any other question? Anulakshmi, you were asking something. Is it clear to you?
Yes, sir. Yes, sir.
Okay.
Sir, one question, sir.
Yes, you can ask.
Sir, in bank reconciliation statement, sometimes question will come like balance as per passbook is overdraft. Calculate what is the balance as per cash book. Can you give some rule to calculate that?
Actually, in our group also, I have given some hints. Okay, but I will tell you, because now it is high time. You cannot go on writing now anything. See, straightforward, they will say favorable balance in cash book or favorable balance in passbook. Whenever they use the word favorable balance, it is deposit balance only. When they say unfavorable balance, that means it is OD. These are the words which are distinguishing whether it is a deposit account or a loan account. The other terminology what is used is debit balance in passbook or debit balance in cash book. And even they have asked, debit balance in passbook means, and they have asked you choices. Debit balance in passbook means what? Or debit balance in your bank accounts, what does it indicate?
OD.
OD, very good. So
OD.
it is a OD account. Whereas debit balance in cash book?
Positive.
Favorable.
Favorable. So these are the things which we have to concentrate. What is the terminology they are using? Whether it is favorable, unfavorable, whether it is debit or credit, whether it is OD or deposit balance. So the way they mention it, the total focus, we should not get confused. First, we should, and many times they ask, they mention it, passbook balance as per their cash. That means it is nothing but cash book balance only. See, you as a bankers, you are all intelligent. You can understand anything. So usually what they do is they will confuse you in English. They will try to mislead you. Now, very simple things I will tell you, like how the balances they mention it, I give you examples. Second thing, checks sent in clearing, checks deposited in clearing, checks deposited in clearing, not collected, checks deposited in clearing, not credited into the bank. See, anything words, terminology, they can use it to confuse us. Like one such things I have mentioned you in some of the questions, that interest allowed. Now interest allowed is a common sense for us. If it is a deposit balance, surely it is a deposit interest earned. If it is a OD account, naturally it is a OD interest only. Now this is the way only they can confuse you. Now I have to just see. When I see that it is OD account, there is no question of I getting any other positive interest in this. It should be only OD interest. So when they say allowed interest, when they are mentioning it as allowed interest in a deposit account, it is a SB interest. But when it is a OD account, it is a OD interest only. Sometimes they say checks issued but not presented. They mention checks issued but not encashed. Checks issued but encashed on 5th April. Now, the moment you say that encashed, and if you are not focusing on the date, your answer goes wrong. He is telling, yes, checks were encashed, but on 4th April, and you are preparing this statement as on 31st March. So immediately that tubelite should be clicked. When he is telling encashed, but that is encashed after 1st April, that means it is equal to not encashed only. So by way of this English only, they will try to confuse you. So be strong. Don't get confused by their terminologies. How the meaning is created, how the meaning you are gaining out of that particular question, that we must focus. And nearly 200 questions we have solved. And out of that, more than 50 questions were on BRS only. So I am expecting that by this time, you must have got a lot of expertise on understanding the terminology which is used in BRS. Still, in the remaining 2 days, when you get some time, please go through the questions which you have already answered. Don't worry, because this terminology, it should be fixed in your brain. So that, because in examination, what happens? You are tensed. You are already having one tension, that whether you will cross that 51% mark. Therefore, I always tell all the friends who are going for accounts, your target is 60, not 50. I don't accept any of my students to get 50. They must get 60 only. Because when you target for 60, surely you will be above 55 in your examination. But for that, surely you have to, whatever questions we have given, nearly, if I am not wrong, 18 accounts papers I have given in this last 15-20 days. Go through that. I know most of you have scored 70%, 80%. Some of our participants, I was happy they were scoring consistently 100%. Good. Continue the same tempo. Even in Telegram, for the last 17 days, daily 15 questions we are attempting. Please go through that only to understand the terminology so that you will not get confused. And if you are getting confused, anytime I am available. Don't hesitate to even call me. Surely, because these remaining 2 days up to 12th morning, 8 o'clock, you are free to call me anytime. Because this is a crucial time for all of us. Maybe my one call can add 3-4 marks to you. And I will be very happy. Don't hesitate. Etla adagale, enduku adagale, em anukuntaru, em anukono. Because I want 60 from you. That is my target. And there are students who have got more than 65, 70. So that is also a what we call it, the people have achieved. I am not only telling an imaginary story. Okay, friends. Any other question?
Sir, long-term use is 150% of long-term source. This indicates the unit has some question came in IBS app for mock questions, sir. Okay.
No, don't worry. You have touched the important area again. When we are talking about fund flow statement, the importance of fund flow statement is very clearly to know as a banker, I must know whether there is diversion of funds. Diversion of funds is not a good sign for a customer and for a banker, because we are giving loans. And if whatever loans you have given, if they are diverted to unproductive purposes, surely it is a big shock to us, because those accounts will be surely becoming NPA. So this fund flow statement is prepared with the main objective is to ensure that there is no diversion of funds. Now, how to know that there is diversion of funds? Now, therefore, when we are discussing about balance sheet, I always used to tell one more term, that on the liability side, I used to say that it should be treated as sources of funds. Because all these liabilities, company is generating funds, and what is the purpose of those funds? To purchase assets. What is the purpose of purchasing assets? To increase the income, to achieve profits, to utilize that asset in such a way that we will earn profit. So what is expected from us? So we have divided our balance sheet into long-term liabilities and current liabilities. Long-term liabilities are the liabilities which are given for purchasing assets which are going to be durable for that company. So indirectly or directly, what is the meaning? From all our long-term use sources, what is expected by the company is to purchase long-term assets, that is fixed assets. So I used to give example that if 120 lakhs is your long-term sources, that is your long-term liability, and your long-term uses, that is your fixed assets, are 100. So 120 minus 100. That means out of your 120 lakhs sources of funds, your company has utilized 100 lakhs for your fixed assets. Now that 20 lakhs is plus, surplus. Why that surplus is there? Because your company is also availing working capital finance. And when you are availing working capital finance, naturally banker is going to ask you your margin. So this 20 lakhs is nothing but the margin which company is going to be utilized while availing the working capital advance. So what happens when the 20 lakhs is transferred to your current liabilities plus margin of the customer, you are purchasing current assets. And when you are dividing that current assets with this current liabilities, if it is coming to 1.33, that means customer's contribution is more than 25%. These are all the connected things to each other. So when the situation is like this, when there is a surplus in your long-term activities, that surplus is an ideal thing for the company because they are reserving some amount as a margin money for availing their working capital finance. So they will utilize that margin money for their working capital loans taken by the bank. Now, I will give you other example. 120 lakhs is their sources of funds and 130 lakhs. 130 lakhs is long-term uses. That is their fixed assets are 130 lakhs. That means more than their sources, that company has availed some amount for purchasing fixed assets. From where that money has come? Surely that money has come from short-term sources. That means many times practically also when you are working in your branch, you will observe that a lot of people avail their cash credit loan and they will purchase Honda City car from that amount. Many instances have happened. And what is happening in the balance sheet? That Honda City car is going to the fixed assets column and the loan is in the CC column, that is your current liabilities column. Now when these short-term sources are utilized for long-term uses, this is called as diversion of funds. And this is not a good sign for any company. And it is surely a big setback even to the bank. Because when the money is diverted from short term to the long term, now Honda City car is unproductive. That fellow should have purchased the stock out of that CC loan, but he has purchased Honda City car. So his stock amount is reduced. When the stock is reduced, turnover is reduced. Turnover is reduced, profit is reduced. That means you are not able to get the interest also back from the customer. This is a vicious circle. And to know this, every banker will prepare this fund flow statement whenever we are sanctioning any loans to your customer, only to check that there is no diversion of funds. And if your long-term sources and long-term uses are giving you surplus, that is the indication that there is no diversion of funds and your bank is safe in financing that particular unit. Is it clear, madam?
Yes, sir. Yes, sir. Thank you, sir.
Because some theoretical questions are expected on this fund flow statement. Question?
Sir, one
Yes,
question was
Lakshmi.
on that the debit side was undercast by 1,000. And how this will affect how the rectification will affect the profit and loss account.
Yes, yes. Which account? Your trial balance is less by undercast by 1,000 rupees, no?
Yes,
Is that the question? Now what happens if your expenses are undercast, means they are showing less, that means there is some mistake. Now it is a common sense again. If your expenses, instead of showing it as 10,000, if it is shown as 8,000, how it is going to impact the profit? Your profit will increase or decrease?
Decrease.
See, your expenditure is undercast, means it is shown less. If your expenditure is less, your profit is
More.
More high, sir.
more. Such things are only creating confusion. When if it is undercast, that means your expenditure has been shown less. If by mistake expenditure is shown less, that means your profit is inflated. Your profit is increased to that extent, which is wrong. So your question will be, if your expenditure is undercast by 1,000, your profit will increase by 1,000. Kani, one more thing. This question was very tactfully asked last time. Yes, your question up to this was same. Your debit side, your one of the expenditure was undercast by 1,000. But subsequently, next sentence was, after rectification, what will be the impact on P&L account? That second sentence make more impact. If that mistake is corrected, if that mistake is corrected means expenditure which was less is increased. If the expenditure is increased, that means when the error is rectified, the profit will reduce. So just check the question, nature of question which is asked. Don't read only half and come to the conclusion. Their first half is that your expenditure is undercast by 1,000. Next sentence is, after rectification, what will be the impact on profit and loss account? After rectification, your profit will reduce. Because of that mistake, profit was inflated. So you have to just read the question. Therefore, that carefully, every time I am writing, whenever I am giving questions, because this is the area where we commit mistakes. Like our Mahabharata's Arjuna, 100% concentration means 100% only. In that 2 hours, you should forget the whole world. You should be in that 120 questions only. Then surely you will get more than 60. Don't think about whether I will get, whether I will not get. Don't go into that conventions. Directly hit, be confident. And surely whenever I am asking questions, all of you are giving more or less correct answers. Your preparation is going on the right lines. So just 2 days, forget everything and attack. Those who have not taken leave tomorrow, fall sick unofficially. Take leave and concentrate. Because these 48 hours are very important for us. Therefore, IBS has arranged this revision class for you. And I was happy because surely this is going to add 5 to 10 marks to you. Okay, friends, any other question?
No, sir.
Tired, no?
No, sir. No.
Not tired? Then shoot questions. Srikant Latkar, you are from which branch? Which bank?
State Bank, sir. State Bank.
Where?
Chandrapur, Maharashtra.
Chandrapur. Oh, by looking at your name, from some bank in Maharashtra only.
Yes, sir.
Okay. I am happy that I am able to touch all the parts of India. Because of Zoom.
Yes, sir. We are also happy.
But take advantage of this, no?
Yes, sir.
Today we were having more than 100. I expect more than 100 to get through. I should get tired to see the score on 12th. On 12th, I am expecting that all of you will put your score after your examination over. And I should get tired by going on congratulating you. But I am happy to be getting tired for congratulating you. Give me that chance.
Thank you, sir.
Sir, thank you, sir. Thank you, sir.
Okay. Any other questions? No questions? Inka saal antara? Okay, Anulakshmi, you are giving very good answers and you are helping me directly, indirectly in Telegram. Very good.
Thank you, sir.
Okay then, sir. If there are no questions, I don't want to make you more tensed. Feel free. Sandhya, any questions?
Sir, cost of
questions
goods
which you
sold and
thought-
cost of production ఒకసారి explain చేస్తారా?
Nice. Very good. Cost of production. Cost of production term is used when you have to find out gross profit. Cost of production, what we call it in short is COP. COP means cost of production means the formula I will tell you so that you will understand it very clearly. Opening stock plus purchases plus manufacturing expenses minus closing stock. That means all the expenditure which is incurred for manufacturing the goods is called as cost of production. When this cost of production is deducted from sales, you will get gross profit. That gross profit will be transferred to P&L. And when we talk about cost of goods sold, so all the selling expenses. So what they say is cost of production plus selling expenses minus your other income. That is, there will be some credits no, on the P&L account credit side. Discount received, interest received, exchange received, or anything. Profit on sale of old assets. So all these things will be on the credit side. So cost of production plus selling expenses minus other income is called as cost of goods sold. That
Okay, sir.
gives you net profit.
Sir, plus other income or minus other income, sir?
Minus other income.
Okay, sir.
Did I tell you plus by mistake?
No, sir. No, sir.
Minus only. If I told you plus, forget it. Cost of production plus selling expenses minus other income is cost of goods sold. And I have given you some questions during our this question papers that see how they try to mislead you. Cost of production, they have given some 89,000. And after that, they have added 1 or 2 sentences. Value of purchases 75,000, value of opening stock 30,000, closing stock 20,000, and sales 1,12,000. What is the gross profit? Now, one thing must come to your mind immediately. When he has given you cost of production, all other things are irrelevant for you, but they confuse you. So when they say that cost of production is this much, That means opening stock, purchases, manufacturing expenses, closing stock, everything is adjusted and cost of production has come. So cost of production, deduct it from sales, your gross profit will be there. But just to confuse you, they will give you cost of production plus purchases, manufacturing expenses and sales, and tell the gross profit. So by mistake, what happens? Again, in cost of production, you are tempted to add these purchases and closing stock and this and that, and all that will bring mess to your answer. So cost of production is given. That means all the expenditure of manufacturing process is there. Cost of goods sold means total expenditure incurred, manufacturing plus selling expenses, or what we call it administrative expenses, all put together minus other income will give us cost of goods sold. And when that is deducted from sales, it will give you net profit.
Okay, sir. Thank you.
Sandhya?
Yes, sir. Yes, sir. Thank you, sir.
Right. Can you come on video for some time? All of you?
Yes, sir.
Because I am only listening to all of you. By chance, if I visit your branches, I must recognize at least. Okay. So, if further questions, you are all clear?
Yes, sir.
Yes, sir. Yes,
Then
sir.
shall we close?
Yes, sir.
लाटकर तुम्ही पहिल्यांदा परीक्षा देताय का?
नाही सर, पहिल्यांदा नाही देतोय. कदाचित शेवटी देतोय.
बस, you are giving it for the last time. This time you will clear.
Yes, sir. Thank you, sir. Thank you very much, sir.
Okay.
Same sir. Same sir. इकडे पण.
सालवाकर, तुम्ही कुठले?
मुंबई.
मुंबई. कोणची बँक?
HSBC.
HSBC. HSBC?
Yes, sir.
Back office है ना फक्त?
Global market operations.
Yes,
Not back office. It's a head office, MG Road.
Yes. Okay. Okay, friends. If there are no further questions.
Thank you, sir.
Thank you, sir.
Thank you, Vinayak sir. Thank you all.
Thank you, sir. Good night, sir.
Wish you all the best. And I am very eagerly waiting to see your scores on 12th. Your examination is over.
Yeah, Vinayak sir, tomorrow we have principals A and B. Kulkarni sir will join 6 o'clock morning. Friends, all please come. Tomorrow 6 o'clock, again we have live.
And you are having very good opportunity tomorrow to know a lot of things, because it will be garam because they are going to be writing that examination. So most of your preparation will be done tomorrow itself. So in all the papers, you should score challenging marks. After attending IBS, 51 is nothing. You should. And I'm sure this classes, whatever you have attended, this is true even for your CIB, because things are repeated again. And even in your future assignments in your bank, surely this is going to make a lot of difference in your functioning. You are able to know because of this preparation. So utilize this in your day-to-day operations so that you will have a successful tenures in your bank and happily function without any tensions. Okay, so wish you all the best.
Thank you, sir. Thank you, friends. Tomorrow morning.
Thank you.
Okay, Biju.
Thank you, sir.
Biju, thank you very much for giving this opportunity to me.
Thank you, sir. Thank you for you also, sir, for excellent session. And tomorrow, friends, tomorrow morning, Pradeep Kulkarni sir is joining from New York. Actually, sir is in America.
International speaker.
International speaker. Tomorrow morning 6 o'clock.
And great faculty, experienced faculty. You
A
have
and
a
B.
lot of points from him, and surely your confidence level will increase.
Yes, sir.
So take advantage of everything, whatever is provided by IBS. Clear Jaiib. Again, we will meet in December for CIB. I will not leave you. Okay, friends. Shall we leave?
Yeah, okay,
Yes,
sir. We
sir.
can wind up. Thank you, friends. Tomorrow, please join 6 o'clock morning. Thank you all. Good night. Thank you very much, sir, once again.
Good night.